Hello everyone, welcome back to Lab for Crypto. Today we are shifting our usual quantitative analysis to explore a key technical indicator, the Bollinger Bands. The name of this indicator came from its creator, John Bollinger, in 1983. It's an indicator which quantitative analysis meets technical analysis, and it's worth spending some time understanding how you can use it and make informed decisions. It is a simple but strong indicator, and I will try my best to improve your understanding of it. Then at the end, we will see an example of Bitcoin price movements, and using this example, we will highlight the utility of Bollinger Bands, especially in medium to short trade timeframes. Now let's move to the platform. In our platform, you can explore this indicator for more than 18 assets. As you can see from the graph, we have four lines. The blue line is the Bitcoin closing price. The red and green lines are the upper and lower Bollinger Bands. And the yellow line is the Bollinger Band width. I'm going to hide the Bollinger Band width for now, and I'm going to explain in a bit what it is. But the immediate observation that we can make is that the Bitcoin price seems to bounce between the channel created from the Bollinger Bands. And usually traders are using this indicator to place their buy orders on the green line and their sell orders on the red line. And I have prepared a couple of slides that will make you understand the mechanics of Bollinger Bands and leverage their power. And as always, I will assume that you have zero mathematical background. And then we will return back to the platform with the knowledge we acquired and explore the use case of this indicator. The equation of Bollinger Bands is the 20 days simple moving average plus or minus 2 times the 20 days standard deviation. By explaining the simple moving average and the standard deviation, you will be able to understand how Bollinger Bands work and how to use them. Let us start with the simple moving average and then move to the standard deviation. A term most of us are familiar with is the average, which is the foundation of the simple moving average. Let's refresh our memory on what average is, and then we will go more deep and explain the SMA. In simple terms, the average is the sum of the values of our interest divided by their total count. For instance, consider we want to calculate the average price of an asset in a 4-day window, which here is represented by the orange color. The price of the asset on day 1, it was 2. On day 2, it was 4. On day 3, it was 5. And lastly, on day 4, it was 3. Using the equation of average, the number we end up with is $3.5. Now here is where it gets interesting. The word moving in SMA refers to the dynamic window used to calculate the average. Although we maintain a 4-day average, we shift this window by 1. So the orange color, as you will be able to see from the previous slide, it moved by 1 day. And this technique is widely used in quantitative and technical analysis to smooth out the data and make the trends more readable. And moving to the next slides, you will see that we'll calculate the SMA using this movable window. Our graph illustrates this concept. It showcases the asset's price over the 7 days, that was the table before, including the 4-day SMA, which is the red line. Now let's shift our focus to standard deviation and complete the foundation needed to understand the Bollinger Bands. A standard deviation measures how dispersed the data is in relation to the average. We are already familiar with the term average as we explained it above. Let us see an example of how we can calculate the standard deviation of the prices on a 4-day window. Based on the equation, we must subtract the asset's average price from the daily price and then square it. The calculations can be found in the table, and if you want, pause the video and try it out. The next step is to sum the values and divide them by the number of days minus 1. As a result, the standard deviation calculation is 1.3. Using the Bollinger Bands equation, we can calculate the upper and lower bands. And I will leave that to you to try. However, on the last slide, you will see a table with all the calculation of the Bollinger Bands and compare them with your findings. Note that we calculate the standard deviation of a moving average. And as a result, the standard deviation is also movable. The orange color helps to visualize the window, and the red color shows the calculation of the 4-day SMA and standard deviation. Using this table, you can check the calculated values of Bollinger Bands of our imaginary asset and visualize the findings using the graph. After the foundation we built on Bollinger Bands, let's go to the platform and see how we can use them. Bollinger Bands seems to do an amazing job in finding potential supports that tend to be price reversals and also finding potential resistances where the price is expected to find a local top. For example, if we mouse over on March 10, 2023, we can see that the Bitcoin price bounced on the lower Bollinger Band, which is the green line, and then found a resistance on the red line, which is the upper Bollinger Band. In the platform, you will be able to find the Bollinger Band width, which is the difference between the upper and the lower band, and is just there to ease your calculation. This indicator is used extensively by medium to short-term traders, but personally I use it to identify periods of high upcoming volatility. When the bands come really close to the price of an asset, like in this case, I expect a volatile move either to the upside or to the downside. I call it the calm before the storm. When this occurs, I calculate the probability of a move to be on the upside or to the downside, and then I take my actions. For example, if the Bollinger Bands of Bitcoin are very tight and in a couple of weeks is the halving, the probability of a move to be to the upside is higher, and I can use this information for a swing trade. But of course, it's not a financial advice. Use the tools you have available and make informed decisions. The more information you accumulate, the more opportunities you create. Do not forget to like the video if you found it helpful and leave us a comment with your thoughts. Until next time, bye bye.